President Trump also addressed the market turbulence with reporters earlier today. Take a listen.
You have to remember the stock market, as an example, is still much higher than when I got here. And it's taken a big hit, but it's going to all bounce back, and it's going to bounce back very big at the right time.
Meanwhile, in Europe, we saw stocks notching their worst trading day ever, with the stock 600 index, as you can see there, off 11%. Similar downside moves in the DAX, CAC, and FTSE as well. Joining me on today's show is Yahoo Finance's Kristin Myers, along with Blackhawk Financial founder Leanna Haakons, back with us in studio. And guys, mainly right now, the headline being that repo operations that the Fed's talking about, we're seeing the Dow off or come about 600 points higher as we're seeing the move here. Still off 5% today, Leanna. We were talking about potential buying opportunities. If you got in earlier this morning, things clearly changing here, but still off more than 1,200 points.
Yeah, I mean, there's been memes all over the internet and social media with regard to stock prices, the markets, and real estate as well, having every millennial waiting for the next downturn. So I think some people are putting some of that cash on the sidelines to work. And it's interesting to think about some of the corporations as well, companies like Berkshire Hathaway with over, about $150 billion in the books that might be putting that to work. And I think we'll see all that in the future. Mm-hmm. For now, it's very unstable footing, but we're going to hear what's going on with the Fed and what their announcement is and maybe how they can provide some support for the markets right now. Yeah,
and we know that, that looking for support has been out there for a while. President Trump has been pushing the Fed to do more. He's been talking about the rate cut that could come next week. We, of course, already got that 50 basis point emergency cut before, but a lot of people wondering what else can be done here when we talk about putting in a floor, the Fed trying to emphasize that they're going to be there to help best they can. We heard that from Jay Powell. But I want to bring in a man who has experience managing money in environments just like this. Joining us now is Pence Capital Management Chief Investment Officer Dryden Pence. And Dryden, thank you for joining us. Just want to get your thoughts. First of all, you've obviously navigated things like this before. It's been 10, 11 years since we were in a bear market. The Dow officially closing in a bear market yesterday. We'll see what happens with the S&P 500 and the NASDAQ today. But in that territory now, what are you making of all the moves we're seeing?
Well, Zach, thanks for having me on. Yeah, you're right. We walked through this minefield before. So I think now we're in that moment where emotions and economics are in this great big tug of war. And so policy announcements, policy decisions, those things begin to be very important because people are looking for something to walk them off the ledge, if you will. And I think the other thing that's really important is everybody has to just kind of remember that this is really a 60 to 90 day phenomenon. This is not a huge structural departure to the security of the U.S. markets or economy or anything like this. This is a relatively short-term event. People get sick for about 14 days. And then they get well. There's a small percentage of the population that gets very sick, and then an even smaller percentage that unfortunately has mortality. Mm-hmm. But when you think about this, it's just kind of the slow and the shock to the system. But in a very short period of time, it fully recovers. And I think China shows us the way. They're pretty much out of this by now. They only had like 14 cases today or something like that. So I think that we have to recognize that this is over fairly soon. And so there's some great opportunities that we can look at in the market if we want to pay close attention to policy, because now everybody's moving all in, all out, or up or down based on whatever they hear on the news.
So, Dryden, it's Kristin here. I want to talk to you about those buying opportunities. We hear a lot of young people, millennials, who are not involved in the market saying that this is a good time for them to put their money to work. So how are you trading through this right now? If you are someone that has a couple of dollars that you want to put into this market, are there any sectors that you're looking at or even any companies that are of particular interest to you right now?
Several. And the big thing that you want to look at is you want to look for companies that have income streams that are either detached from the current crisis or that are much longer than the 60-day, 90-day stop that we have. So if you looked at large defense companies like Northrop Grumman or UTX, they have very large contracts for a very long time that really aren't affected by this. So there's an opportunity because they've just been taken down. The other companies to take a look at are ones that really are helping people enable through this. And that would be where you would look at Amazon, because if people are cocooning or people staying at home, they're going to be buying off Amazon. And then think of AWS. I mean, the cloud doesn't get the virus. And so those services are very important. And then the next thing that you can look to is a Visa MasterCard, because, transactions continue and people continue all the way through this. And you'll begin to see these are companies that I think that will work their way through this and probably recover exceedingly well as we get through it. Again, this is a 60 to 90-day deal, if that.
Yeah, I mean, that's the hope at that point. But Dryden, when we're looking at this right now, we're seeing the Dow cut its losses by about a half. Right now, we're only off by, I want to say, as you can see there, the Dow is off less than 1,000 points now. Keep in mind, we were off about 2,100 points just a bit ago. And all of this swinging on the new update we're getting from the Fed, offering $500 billion in a 3-month repo operation. I want to keep you there, and I want to bring in Yahoo Finance's Brian Chung, who joins us now with the details of what we're hearing out of the Fed. And Brian, clearly it's calming the market.
It's calming the market, but I want to walk you through the logistics of all of this. So the announcement from the Federal Reserve, the big headline being the $500 billion that's going to offer through its term repo facility. Now, for those that don't know what the repo facility is, it's overnight lending. It's the plumbing of the financial system, if you will. There are a lot of banks and broker dealers that need to close positions on their balance sheet. They need cash sometimes, even if it's just overnight. They haven't been able to find it as of late, which is why the Federal Reserve is offering $500 billion of it through this program. Now, this is not going to be overnight. The $500 billion is actually going to be a 3-month repo operation. This is the longest term that they've offered since the flare-up that we saw in September. Mm-hmm. But the other thing, too, I think that's more important here is really the term duration of what they're going to be buying as part of this $60 billion, which is separate from the repo. The $60 billion of assets that the Fed has been buying per month. For the last few months, it's been short-term T-bills, right? These are 3-month treasuries. They've been saying this is a fairly neutral thing to be buying, but the announcement today was kind of buried in there, but it said they do intend to buy treasury securities of a range of maturities, which could imply anything between 3 months and maybe even 10 years. We don't know the exact specifics of it, but this is a step towards quantitative easing, basically. Yeah. And quantitative easing, for the semantics of it, it's kind of up for debate. But it's really, in 2008, at least in the context of 2008, it was buying longer-term treasuries, so 10-year treasuries or longer, and agency mortgage-backed securities. Now, the Fed's not doing that right now, but I think that what they're doing with the announcement today is bridging it so that markets will at least calm down through next Wednesday, when the Fed has a scheduled FOMC meeting where they would announce large-scale asset purchases of both longer-term treasuries and mortgage-backed securities. And it looks like markets are responding, at least in part, kindly to this news.
Yeah, I mean, that would be the most kind of the biggest shock they could offer right now, I think, because right now when you look at the Fed funds future tool here, when we're looking at what the market's pricing in for what we're going to get out of that FOMC decision, right now, pretty much 100% price probability that we're going to go back to a zero interest rate policy, which we haven't seen since the financial crisis. Back then, unemployment was 10%. Right now, we still got that update. We're still about 3.5%. So when you think about how drastic that alone would be, that's just putting it into context there. But then also, if you get a return to QE, that would be another thing here saying the Fed's stopping whatever market. I mean, it's just a 20% decline when you think about it. Comparing this now to what we saw in the financial crisis, night and day in terms of what we're seeing, or maybe not. What are you hearing about the liquidity problems?
You bring up a really good point, which is that the dynamics of our labor market and our economy don't look like what they look like when the Federal Reserve cut to zero in the financial crisis, right? The unemployment rate was at, what, 3.5, 10% back then. Right? 10% back then. We haven't seen the actual material impact on the two mandates that the Federal Reserve is really watching right now when you think about maximum employment and stable prices, right? We haven't seen a spike up in inflation. We haven't seen an uptick in unemployment. The Federal Reserve is doing this because solely financial market conditions. And the only thing you need to look at are treasuries right now. And I understand that everyone's watching the Dow Jones, everyone's watching the S&P 500. But consider, for example, that in normal market times, if there's a sell-off in equities, there's also a rally in bonds. That means that yields go down. Yesterday, we saw the 10-year go up to as high as 86 basis points, despite the fact that we saw a massive sell-off in all the major indices. Yep. That's not right. That's not normal. So people are saying liquidity in the Treasury market is just not there right now. So the Federal Reserve is responding, I think, to the issues that we've seen with there not being counterparties in that space. They're saying we're going to amp up these repo operations so that we can hobble through next Wednesday. And then once we get to next Wednesday, we're going to announce more asset purchases so that at least there's one major counterparty, that being the Federal Reserve itself, itself playing in the market.
Yeah, Dryden, just want to get your take on all this too as an investor here when we're looking at kind of the jitters around this. I mean, clearly the market moving on this news, but does it do anything more in your mind to kind of calm the fears of what we're seeing play out? Because it sounded like you were already kind of taking all of this in stride when you think about companies out there that might not be impacted. But clearly, this is not normal trading action that we've been seeing here with these moves, potentially the worst day that we're going to get today.
Well, it's not normal trading action. I mean, what you're seeing is a panic. I mean, you basically have a pandemic turn into a panic that kind of turns into a pan opportunity. But I mean, the point is, I don't know that the parallel is going back to the financial crisis. If you think of market movement, the parallel is more like 2018. We were recovered from that in about 60 or 70 days. I mean, so I think that we have to recognize and ask ourselves, is this going to be a V shape or square root shape or U shape in terms of how the markets recover to this? But the thing that's most important now is that there are policy responses, and you could probably look forward to something coming out every day, every other day. There's a policy response that's either fiscal or monetary that is clear and big, which is really designed to give people some confidence that people are paying attention to this and that we're beginning to get better. So you got three things going on. You're going to have fiscal policy, you're going to have monetary policy, and you're going to have data that's going to look really ugly on coronavirus at first, but then very rapidly taper off and get better. So I think what we're looking for is we're setting ourselves up for a period of time that it's going to get, the coronavirus is going to get worse before it gets better. But then when it gets better relatively quickly. And that's going to be important. And then in the meantime, we're putting a lot of stimulus into this economy. So we have to first stop the fear slide, and then we have to look at stabilizing everything so it can move back to where a more normal positioning is. But I think that this is why you're seeing these policy moves and these announcements come out, just to get everybody to settle down and focus on really. I mean, again, if you're saving for the rest of your life, what happens over the next 60 to 90 days is not that important. It's more of an opportunity than a huge fear factor.
No, it's a good reminder here, especially as we're seeing the market moves intensify in the short term. When you're looking at an hour-by-hour chart, it's always a very large move, but in the context of time, something to keep in mind here. Dryden, Pence, thank you so much. Hey, investors, Zack Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.